We're looking at Nasdaq as a daily chart. Today is the 6th. Normally, before I come in front of this price action and talk about it, I normally have thought about it, looked at it. In my first glance, I can see what I want to do initially, but I must also talk about it, and I must also keep myself sticking to what I'm thinking about and not really getting swayed by price action due, because sometimes you can get swayed by price action in whatever it does. So let's just get right into it. So yesterday I talked about how I wanted to see price rally into these highs here, this big high here, together with this. Um, this is Tuesday's high. Today is Thursday. So yesterday we did not really have a very huge candlestick. We only opened up right into this high and that high. This candlestick, just to make sure, this candlestick's high is 29,862.95. It's 62.95, and yesterday's high was 948, 9,948. So we managed to get into that Tuesday high together with this high here. And yesterday, London was very nice. I'm talking about pre-London, not really London. It was very nice. We had a very nice price run higher that was very consistent, and that's what I normally should be looking for. Very easy liquidity runs. That's the best of trading. That's the best of the best. So we came down, closed down on the low, so we had a bearish candlestick. So immediately I look at this daily chart. I normally start thinking about seasonal tendencies. I think about where price might be headed, and we've been inside this consolidation here. I talked about this peanut while we're trading around here, and no, and we broke lower. I wanted to see it go higher, but we broke lower first. To me, this is manipulation. So we went lower, took out this low here, and ran lower still, took out this and this here, and then we ran lower into this order flow here from back in April. So we ran here, and then this was on Thursday, that's last week. Very huge bullish candlestick. So this is the bullish order block, this down close candle here. So we did not spend a lot of time inside that, even that week. Opened up here, look at the daily low, just inside that week. That was on Friday, went higher and then came back closed down on that low. So the next week we opened up that huge new week opening gap. See that? That's the close, that's the new week opening gap. And then Monday we trade higher. We ran into this high and this high here. And then Tuesday we open up, we run Monday's high, and then we run into this inefficiency together with this CB here. I talked about this here while we were trading here. We ran into that through that high here to that buy side, and eventually I wanted to see it run to that high, and we went through that high yesterday in London, pre-London. So we've been good so far. I don't really think we're done with these highs here, but we are in August, and there's normally a difficult trading session. That means that there is normally a high resistance liquidity run in August. So normally there are lows that form around August September time period, and they trade through the entire of the year. So I think this is gonna be very significant. If we don't trade lower and go through this here, this can be the low of this year that it makes in July, August time period, and then we run higher. So at the end of the year, I'm talking about long term now. We'll want to see price go above that high here, these relative equal highs here that I wanted to see run here, but we had this run lower, check sell side first, and then run higher into those highs here. So far we're good. So we're gonna go into the lower time frames and look at what kind of price action we have. So I'm gonna go straight to a 1 hour chart. So this 1 hour chart, I'm gonna put on the daily delineations. But first thing first, can see from the low here in 29 went higher, and then this is the current new week opening gap. We opened up, we ran low. I talked about this price action here in London. I wanted to see it run to this high here together with these relative equal highs. We dipped lower. I've talked about this before. We ran higher above that high, and then we've been sticking up with higher prices. I talked about while we're trading here in London, I was talking about higher prices. We went higher. Yesterday we were trading around, let's now look at the daily delineations. So we're trading around here. I talked about higher prices. We ran that high here together with the old high around 930s, 930, if I can remember well. And I talked about the event horizon PDRA, that is between this high here and the daily high that I talked about. So today, yesterday we ran higher in the New York Open. You can look at that. We ran above that high here, and then we dipped lower below these relative equal lows here, and then we've been trading lower. So we've been trading lower. We've opened up today here. If you look at this here, let me just zoom in a little. So we've opened up here today, had a bullish candlestick here 1 hour, and then we went lower, and we've traded below yesterday's low. So after trading below yesterday's low here, we've had this huge candlestick here, and then we've been sticking around here. So to me, this is still bearish. So let's look at 5 minutes now. So I came in front of the chart here. I did not really talk about it, but I was looking at this price action here. And now that I've talked about how we are bearish, well, on this here, I was trying to scalp today. We went lower, we went below this low here, and then we started trading higher. So my bias is still bearish. I saw this here, this is the CB here. That is very obvious. We went higher. Look at the bodies here. We respect them, start trading lower. And now we had this low here, and now we have opened up New York opening price here. So I was thinking about lower prices, because you can see that we have a swing high here that does not go above this swing high here, so we are bearish. And I annotated this sell side together with the very small inefficiency here. This inefficiency here is important to me because of the wicks here. They're also a part of that, but I want to annotate that small inefficiency here. So I want to see a lower prices. So I jumped in on a sell on 450 to 9,450 while we're trading here. We just opened up. I saw this candlestick run lower here, and then we started trading higher. So I jumped in on a sell at 450, and then I was expecting for it to trade lower 20 points, and that is for 30.51. That's 20 points. So it was very difficult here, but I was not really in front of the chart and did not talk about this here, but I knew we were bearish. I did not really want to see price head back into that inefficiency. I saw this high here, and in my mind I was thinking, like, I want to see price go above that high here and then reject it, and that's exactly what it has done. So this is a high resistance liquidity run because of the higher prices from the higher time frames and the short-term momentum that is bearish. So if you look at the 15-minute chart here, I've not really talked about it. So if you look at the 15-minute here, we've been trading lower. We open up today, very small new day opening gap. This is a new day opening gap. We run higher, and then you can see the movement lower here. After running yesterday's low, that's the yesterday's low here that was formed going into the close of yesterday. Then we run higher. We make a high that is lower than this high here, and then now we are sticking around here. So this is a high resistance liquidity run. Even though we are bearish, even though I took on a trade, ideally, if I were to be in front of price action and talking about it, I could not have had this trade on, ideally, but I jumped into it. A drawdown of 30 32 points. This candlestick high is 479. So from 450 to 479, that is 29 points drawdown, something that normally I will not withstand. So we dropped lower after taking out this small high here, and then we went into that 20 points. That's my target for the day. So this is a high resistance liquidity run. So what I'm looking for is initial lower prices, but if we run into this high here, it will be very interesting how we trade around that inefficiency, especially after we run that high out. We'll be looking at, does it have an interest to run that high here and maybe go to the current daily high, or will it just go into this here and take out this high here maybe and then collapse and start trading low? I mean, that's what I want to see because of the momentum we're bearish. So we're gonna look at price from this lens here, and then this is gonna be the daily chart right there, and now we're here. So something important is when I look at the daily chart, I'm normally looking at the daily highs and lows within the past 3 days. So today is day 1, day 2, day 3. So yesterday's low, very, very important price point. So we might be interested in running that low. So that is yesterday's low here. That's why it's annotated here together with the sell side. That's why I'm interested in that sell side. Another reason why I'm interested in that sell side. We might run into that low. So after we've opened up today, this is not really the kind of momentum that I want to see. But the fact that we've made a high that has taken out this high here, we ran into this inefficiency, and now we're trading around here. I want to see lower prices. So let's remove this order here. So we opened up in Asia today. That is 230, that is 155 to here on this candlestick here. We ran higher. You can see the inefficiency here together with the small volume imbalance there. The bodies do not really have an interest in trading to the upper portion of that order flow, and then we rejected it, went lower from this CB here. That is interesting now, and then we had this movement lower. We have another CB here. That's interesting. We moved a lot more lower, and now we formed this low here. After we formed this low here and taking out yesterday's low, that's the most important thing run has done. We have this high here. We ran from this low here back into this range and took out this high here, and the most important thing is that we ran into this inefficiency here. Look at the bodies, they did not trade to the upper half of that inefficiency, and then we start rejecting lower. So we've opened up today here, and now we are inside this high resistance liquidity run. So even though my bias is bearish, that's the short-term bias, this is still a high resistance liquidity run. So after we did this here, this candlestick here, this bearish order block, and it's interesting to me together with the half. Let's actually look at this. Yeah, I don't really talk about order blocks in this lower time frame more often, but this candlestick here is important. So this is the low here, and this is the lower half, and that's the half, and you can see the way it's reacting to that half. So ideally, just like any other concept, I want to see price remain on the lower half of that bearish order block. So that will be order flow. There we go. And then the low of this 75.40. I hope that's 75.40 now. Okay. And then I'm gonna enter the low. Right there. So that's our bearish order block. So order flow suggests that if this is the bearish order block and I'm looking for lower prices, I don't really want to see price trade with the bodies and close to the upper half of that bearish order block. It's an up close candle. It does two things. We run this buy side here and then we run into this CB here. That's the sell side imbalance price and efficiency. If we are bearish, this has behaved nicely. We are weak. We had this run lower and even we ran this low out here with a wick, and then now we are going into the open, I mean a New York open, and now we are right here. So this is my order flow for today. I'm looking for price to stay on the lower portion of that bearish order block. If we start trading into the upper portion of that bearish order block, then we'll be trading into that inefficiency and even going above this high here and possibly above this high here. I've talked about the new day opening gap. I think we're trading inside that new day opening gap. It's right here. This is a very interesting PDRA also, but I'm not gonna annotate it because at the same price point we have this bearish order block telling the narrative. So that's the where we closed yesterday and where we've opened up today with 0 GMT. So we're still trading inside that range. So I'm expecting lower prices, and we're using this bearish order block. I mean, that's what has come to mind. So another way to determine a high resistance liquidity run is when we have a lot of wicks on the area where we are trading. If you look at this price action here, these are a lot of wicks, a lot of them, and very many of them, and very huge wicks. Like this wick here, very big wick. This wick here, it's a big wick. I mean, how many points are these? This is the close and the low. The close here is 29,427.64 and the low is 414. So from 407 to 414, that's huge. That's around 13 points. 13 points worth of overs. Very, I mean, if you look at the lens of the eye, it's small, but the impact when you go into a trade and let's say you're selling there, that week is impactful to your open or close on that trade. If you buy it, it's the same. It's the same thing. It's very impactful to the closure of your trade. So these very many weeks here, and now that they are very big in regards to how many points they are trading, this in itself is a high resistance liquidity run. And if you look at the bodies, they're not really like one way. They're not going to one direction. It's up and down, up and down, up and down. It's like scribbling. So these are the tenets of a high resistance liquidity run. So I've explained the momentum. We are bearish, of course. I've explained why I want to see those lower prices. I've explained the narrative using this CB here, using this bearish order block, and using liquidity pools. So this is the sell side that I want to see price trade into, and most likely trade into this low. So if you look at this 15-minute chart, same case scenario, very many weeks, and then it's like scribbling. We are up and down, up and down. We are not like making one wave with momentum. Like what happened here is an up close candle, an up close candle, up close candle, up close candle, and then if you look at this here, down close, down close, down close, down close, that's this weakness, and you are more likely to be correct if you are selling here. You're more likely to be correct if you are buying here. So, but where we are currently trading at, it's difficult, and It's not really majority of the time is difficult in this moment. It's normally not difficult. It's normally a one-way street most of the time. So so we're gonna see how this price delivered with the narrative of this bearish order block, with the narrative of that inefficiency. So I've stated out what I want to see, and what I want to see cannot really be the determinant of my trade. My trades are what price does. So what I want to see and what price does, that they might be very two different things. Sometimes I'm correct, sometimes I'm wrong, and majority of the time when I'm wrong is when I jump into a trade on what I want to see, and that should not be the case. That should not be the case. I should be jumping into a trade on what has price done. So it has done this, yes, so it's gonna go there, and that's what you should be doing. That's when the trade is likely to pan out in the direction on which you're trading. So make sure you get that if you are using also this concept. You should not be trading just because you think that price is going to do it. Majority of the time is not going to do it. Majority of the time it's not going to do it. So, or it will do it, but at a later time, not at the moment that you think that is going to do it immediately. So you must wait for it to do something, and then you go into a trade on the original idea that you had, or the original bias that you had. So I mean, it's the same like this case here, this trade that I jumped here. Yes, the bias is bearish, but I just looked at 450 and I jumped onto that sell at 450, and it's just started going against me, not knowing that we have a high here that can be taken out fast, and then it will go lower. So you must also be aware of that. So we have this inefficiency here. It's a very small one, but still, the fact is that an inefficiency still. I want to highlight this sell side. It's becoming difficult. Let me just move this, then move that down there, this back here, and then I'll select. So that's sell side. This is an external range liquidity pool. That's an inefficiency. So I've talked about this before. Price only trades into all highs and all lows, or price trades into inefficiencies. That's what price does. It trades into all highs and all lows. It trades into inefficiencies. That is fair value gaps. That's basically gaps. So we're trading at 29,452. So we're back down on the low of that bearish order block. So let's see how we'll trade here. And the most interesting time that I want to be looking at is how we open up in London. So we've been sticking up on the lower portion of that bearish order block. We've made this high here. We've not gone above it. We've made this swing high here, another one here. But the way it's trading with the wicks, I'm still expecting a high resistance liquidity run. So I'll be here going into London Open. Today I started the live stream. It's not really a live stream, it's a pre-recorded live trading. So the time is 8:31 a.m. Normally I start at 7, but no, real life happens. So I stayed up late. I started looking at price around the first macro, that's 7:50 to 8:10, but I was here at around 8:03 because we're 25 minutes into this live. Well, at the moment it's live, but as soon as I'll be watching this later on, or anybody else maybe watches this will be pre-recorded. So we are trading lower. We're trading at 450, that 450 level. So that 450 level is an area of interest for me. That's why earlier on when I was looking at it while it was trading here, that's why I jumped in short at 450. So that 450 level is an area of interest. So that's a buy for me. This bearish order block candlestick's low is 452.47. That's interesting, right? So we're trading at 449 still. So I like the way we went to that midpoint of that bearish order block. The midpoint of a bearish order block is mean threshold. That is mean threshold. The midpoint of an inefficiency is consequent encroachment. Consequential, it's consequent encroachment. That's the midpoint of an inefficiency, but I just call them midpoints. I know what they are, but I just call them midpoints. So we ran into that. We did not run into that with the bodies, and then we rejected that. Ran back up higher. Look at the wick here at exactly that level, and then we're trading lower now. So we've gone lower from 450, that 450 level. We are back down to 439 now. So if I were to sell 450, and 430 could be my exit. So the low here is 434. That's interesting, right? So the thing that I want to see price do here, now that we are trading outside that bearish order block, and if we are to be very weak, I want to see it form an inefficiency right there, and then the next candlestick we start heading lower into these lows. The time is 434. The next macro is at not 434. Let's just say 434, 834. The next macro is at 850 to 910. So it's high time we're gonna be running into a liquidity pool. So we've made a run outside that bearish order block. So I want to see price stay on the lower portion of that bearish order block just to be very weak. For it to be very weak and to expect a run into this sell cycle. Otherwise, if it does not do that, then we'll just have a run higher, run above this threshold here with the bodies, and then we'll be expecting a run to that high. But I want to see lower prices. I'm just talking about the two sides of the coin of whatever price can do. But I'm looking at what is the what's the most likelihood of price trading lower? What's the most likelihood that price is gonna go higher? Now, number one, what's the momentum? We are bearish. Then why will you be going against the momentum, right? So we are back up again into that price point here. That is around 450. So we've not even managed to get into 430s. This candlestick slow is 430, 434, 434.58. So we've gone up high into 454 again. Let's see if they push it lower. Look at that. We pushed it back to 437. We've not formed an inefficiency here. And there we go, 430s. Boom. Say what to be bearish at 450. There we go. That's 20 points. Nice, right? So we've opened up here, ran higher, touched that bearish order block, and you can see the rejection here. If you look at the 1 minute, let's look at the 1 minute here real quick. Look at that. We trade lower, we open up here, trade right back into that bearish order block low, and then we reject that. That bearish order block open, that candlestick open, the open here is 455.41. See that? What's the open? 455.14, not 41, 14. This candlestick's high, 454.70, just 1 point short of that opening price. That's the reason why I'm interested in that bearish order blocks low. So that low is 452.76. So if you go short at 450, you are filled in, and then 30 points right there. So the likelihood that you're going to be right with momentum is very high. And when you couple that with these ICT concepts, you're most likely to be correct. You're not going to be correct always. Maybe some other things may pressure you into getting out of a trade, but you're most likely to be correct. Even in these high resistance liquidity runs, still, if you apply this concept here with this narrative, you are right. So my interest still is this sell side liquidity pool here together with this external range liquidity pool here. I mean, it's internal. External range liquidity pools are like this sell side here, but this is an internal range liquidity pool. It's not really external. External range liquidity pools are swing highs and swing lows, and especially the swing lows that form the daily high and daily lows while we've not closed in on the day. Those are external range liquidity pools. So eventually, want to see price go into the low here. This candlestick's low is 404, so that's around 400, big figure. And this candlestick's low that makes this inefficiency, the low here is 401, so 400 level is inside that inefficiency, and that's why I want to see price trade to. So we've seen the characteristics of a high resistance liquidity run today. If we look at the daily chart, this speaks volume. I mean, we are bearish, but look at the daily chart. From the higher time frames, we are bullish. If you look at the weekly chart, yeah, this week has been very significant in higher prices. We've been trading higher. We've been inside a consolidation here for a lot of weeks. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, like 7 to 9 weeks. We've been inside this consolidation here, and then 1 week just happened. We're up there. So this is still a consolidation. So look at that here. Still, price is trying to refer to that bearish order block. We've run to that low, and it has rejected from that low of that bearish order block. Look at that. So earlier on, I used to think that order blocks only play one role. And when you understand that about price, it's very difficult to it's very easy to maneuver price, that order blocks are not just a turning point in price. It's not just a turning point in price. Sometimes it can be a target. An order block can be a target. Absolutely, it can be a target. When ICT talked thought that about price, it really changed my perspective on how to read price. I usually thought that inefficiencies are the ones that price normally targets, but is just the opposite. Inefficiencies can be a turning point in price, and majority of the time when they are a turning point in prices, price normally react very well. And when it's normally a target, price normally runs into those inefficiencies very fast. Same thing for order blocks. I normally thought order blocks can be a turning point. Not normally, but I majority. What am I talking about? Majority of the time, I normally thought that. Not even majority of the time. Normally, always I thought that order blocks were turning points in price. I did not think that order blocks can be targets in price. But ICT come out and said that order blocks can be also targets in price, and I was like, oh, now that makes sense. Because the trades that I had inside bearish order blocks trying to buy, they would normally go way beyond even the mean threshold and even the low, and run that low out. So, man, especially trading currencies, that used to be very tough. Used to be very tough. So we're trading back up into that bearish order block low. That's 451. So still a high resistance. We run. I mean, we run lower, we go higher. We go lower, we go higher. So you gotta be patient and just wait for the momentum really kick in. So look at what it's doing now, up to 460. We're trading at the midnight New York Open. It was around 460. Look at where we closed. So we've closed in on that 15-minute candlestick. Look at this here. And look at this 15-minute candlestick. It's just undecided. It's just undecided. So we've had this very huge week. Normally when we have huge weeks like this here, I normally expect price to run through them, because there's a retail concept that retail traders call this a hammer, and that's really complete bullshit. I support whatever ICT says. Normally when retail traders see something like this here, they think that price is very bullish. They think that is very bullish, and from my experience, these weeks here are normally ran out. They're normally ran out. Majority of the time they're normally ran out. So now that I'm talking about weaker prices in my price action today, we're gonna be seeing what price does with this 15-minute wick here. Does it have an ability to run through that wick here, or will we be able to trade higher? So this 5-minute chart, we've managed to get high into that opening price. Now we are trading lower into that bearish order blocks low. So we have for around 4 minutes, then we're gonna see whatever these macro that welcomes the London Open, which is gonna run into. So I've talked about this 15-minute wick here. That is, it's the most prominent wick in this price action today. I expect price to run through that wick here and trade lower. So the low of this wick here, let's look at the low here, is 429.20, and I think it's this low here. Yeah, this low is 429.20. So this low here, I want to see price run through it, and look at that. Look at what it's doing. And retail traders call this the hammer, a hammer. Now that it has a long wick below it, a long tail or rather, and then a very small bodied candlestick, they call that a hammer. It's gonna go high, it's gonna go higher. What does it do? It runs through that wick like it never happened, right? Well, how about that, right? So these are also one of the things that you should learn when you try to read candlesticks. And I've never really read anything about retail trading, but I've heard ICT talk about it when he teaches. I mean, that just happened right now. That just happened right now, right? We're into that high here. Retail traders are chasing that higher, saying it's gonna go above that bearish order block. Maybe they don't even know what that bearish order block, whether it is existing there. They don't know maybe why this is a bearish order block, right? Wow. So we just ran higher into 460s. We touched 460s, and look at that candlestick here. In one candlestick here, it's ran through that whole week and into that low and into that 429. So if you could still be a seller at 450, those are still 20 points right there. If you could have finessed this here 460, go short. Look at that, right? So the next drawn liquidity is that sell side plus that internal rand liquidity pool here, that BC. So we're trading at 427 now, and we're remaining now with 1 minute, and then we're gonna see where they push price in regards to that macro that welcomes the London Open. So immediately we take out this sell side here. I think that will be it for me for today, and we'll close this up. I don't want to make this long. So there we go. We've opened up. That's the 850 candlestick. In New York, it is the 250 AM, because 7 my time is midnight, then 8 is 1, so that is 150. Yes, that's 150 AM in New York, but my time is 8:50 in the morning. So trading at 430s, further away from that 450 level. So we're sticking around that 426 level. So whatever it is doing, it is building sell side. It's building up relative equal lows. And retail traders think that relative equal lows are something like something where price bounced. They believe in trend lines. I mean, a retail trader can come in price and say, out of nowhere, they do not know what they're doing. Now that price bounced up that low, I'm gonna make these let's make this dark orange. They're gonna put a line, a trend line like that, and say, now that price bounced up below that low, I'm gonna buy it because it bounced up that low and go higher. I mean, which low are you gonna use? Are you gonna use that low? Or how about that? Which one are you gonna use? Or that one? Huh? Interesting, right? It's crazy. I look at relative equal lows as a draw on liquidity, on price. Price is gonna go there to facilitate those buys that are down there. Price is gonna go there and take them in, and maybe if they're lucky, it will go higher. But majority of the time, it normally goes lower, and it normally goes through those lows here, especially if they are equal lows. Price normally goes through them. So we've traded back up to 450. That's 450.95. Now that we are on the lower portion of that, not the lower portion, outside that bearish order block there, I'm expecting price to start trading lower. And now that we've formed these are relative equal lows here, that is sell side liquidity. Another thing that ICT teaches very well is the paradigm shift. I don't normally talk about this a lot because once you understand it, there's not really any point of talking about it. Just refer people to go and watch those ICT trades. Not ICT trades, but ICT lessons. Go and search about the paradigm shift, and you really understand why price draws to swing highs and swing lows. That is I'm talking about the previous swing highs and swing lows. I mean, those are liquidity pools. It's going there to facilitate those people are trying to buy it or people are trying to sell it. It's going there to facilitate those kind of orders. Below all those and all the inefficiencies that are below price, that is sell side, and those are internal range liquidity. Those are all liquidity pools. Liquidity pools are liquidity pools can be sell side when we are when it's below price. That's an all low or an all inefficiency like this one here. That can be that is sell side liquidity. It's liquidity. That's an all low. That's liquidity, but in what form? In form of sell side. If we are here and we're trying to look at an old high, let's say we are speculating price to run higher. This is an old high, that is buy side. There can be buy stops there. People are trying to buy it on a breakout, or people are protecting their short position. All of that is buy side. So price is trying to go there to facilitate that kind of to take in those orders. It's going in there to take in those orders. So when you understand that paradigm shift, then you start attacking that liquidity pool. And what do you use to attack those liquidity pools? Concepts like this one, inefficiencies, concepts like bearish order blocks, bullish order blocks, and specific price points like the mid New York Open, the London Open, 0 GMT Open, the new week opening gap, new day opening gap. So all that is the logic that supports the smart money concept. not trend lines, not peanuts, not a ceiling. He talked about a ceiling, and I was laughing about that. Imagine somebody coming to price and talking about, hey, these are relative equal highs, that's a ceiling. Immediately price goes into that, then we're gonna trade lower. Wow, that's just wow. That's logic that is just from hell, bro. Right. So anyway, you gotta make money how you gotta make money, right? Buying and selling pressure, right? Well, I'm talking about this because we are inside a high resistance liquidity run, and I'm not really interested in whatever price is gonna do. That's why I'm not really saying, hey, I'm gonna buy that for 50 level. I mean, this is a high resistance liquidity run. I've talked about that, and I've talked about how the wicks are just not making price go anywhere here. So I'm not gonna really make this video so long. We're remaining with 9 minutes, and then this video clicks 1 hour. So, and we're remaining with 2 minutes, and we're gonna open up for London. So I'm gonna stay here until this macro that welcomes in London. That's this 850 level, 850 candlestick, this one here. This is the 855, and then I'm gonna stay and look at what that London open looks like, and then I'm gonna look at 905. After 905, then we're gonna close this up. So sometimes when I come in front of price, I normally ask myself, what will I be interested in if I were to come to this price action right now? Honestly, I could look at this 5-minute candlestick here, and I mean candlestick chart here, and I will be like, just wow. I mean, we're bearish. We're bearish. We've gone below yesterday's low. That's interesting. We've made this run higher here. I mean, this is significant, and we've ran into this here. If it's behaving like this and it wants to run higher, I'll be looking for buys above this inefficiency here. If it runs higher, I've talked about this here already. If it runs higher, we go above this bearish order block, we'll go into this here, we're going to go higher. But what's the momentum? We are bearish, and I'm looking for lower prices below the lower portion of this bearish order block, and look at how it's behaving when it runs into that bearish order block. You see that price runs higher. It takes a lot of time to run higher, a lot of candlesticks to run higher, but then when it reaches into that bearish order block, it runs lower. It runs lower very fast. It takes 10 minutes to go higher, but inside just a few just a few seconds, trans lower. And I've talked about these relative equal lows, right? Just now, we've run into that bearish order block. Look at that. Back down to 428. So we've run into that around 450 area. This candlestick's high is 460.58. This candlestick's high here, we opened up and it has made a very small wick, that is 460. And just so you know, this is London Open. That 9 London opens at 2, and in London right now the time is 7, I think. Yeah, this is 7 a.m. in London. 9 a.m. my time is 7 a.m. That is 2 hours. 2 hours in front of London and a couple hours in front of New York. So this candlestick here is London Open. So London has opened, bearish order block, whoop, runs low, and where does it run into? Relative equal lows. Yeah. And where are we? Inside that macro here that I talked about. So 858, we close right there in London. Open up. Where does it run into? The sell side, relative equal lows here. And this candlestick slow is 420, 420.95. That's interesting, right? Well, if that is not really interesting to you, then I don't know what is. So still, what am I looking for? That sell side. So even in these high resistance liquidity run, if you couple up these ICT concepts together with the momentum, you're still gonna get what you're looking for. So we barely ran into 480s. I mean, we ran into 480 just once here. We ran into this is 480. I think this was 479. Would not even touch 480. This high is 479. Had this rejection. This high here is the midpoint of that bearish order block, and this high is 475.51. Then we consolidate here, we start running lower. But if you look at a price, how many times have we run from 450 to 430s? This was once, this was twice, and this is thrice now. And now where are we? We're trading at 425, 426. So we have 1 minute, and then we're gonna finish with this here, and then I'm gonna be staying here for the next 5-minute candlestick, and then we're gonna call it a session. So we're trading around that 428. So I want to see price run lower into the best case scenario, run lower into 400. If we do 400, that would be very nice. But now we are in a high resistance liquidity run. Price can just start trading high again with this candlestick, but I want to see it run lower. So we've touched 420s, 421. That's very interesting. So right there at 419. Right there at 417, 418. So can I take a stab at 420? I mean, yes, the way it's behaving, that 420 is the sell. So hypothetically, let's sell at 420. Hypothetically, let's expect price to just remain weak and trade to 400. There we go, 410, not 413s. So we've gone below that low here. This candlestick's low is 414.89 and this low is 413.33. That was nice. That was a nice drop there. So I want to see it going to, this is candlestick's low is 404, and I want to see it go through this sell side. We're trading at 417, 418 still. 419 we've touched again 420s. Back down to 417s. 414. Back at 415s now. Again 414. So I want to see 410 now. Then we'll go with there 412, 411, 410. See that? That's nice, right? So 10, another 10 more points lower, and then we're gonna trade into that sell side. That sell side is at 404. So that is 409. See, it's going, right? And what is it going for? That low there. And it's interesting because that low also has this inefficiency here. So we're gonna go through that, not only just through that low and through that inefficiency, that BC there. So trading at that 411 level, we've opened up a new candlestick. Now we finished the macro. This 1, 2, 3, 4 candlesticks. This is the macro here that welcomes in London, and this is London. I've just talked about this. So we open here 850, 855, 9, London open, and London has opened, and we've had this run lower, and right there is 905. So I want to see that low here being taken out. So I was talking about how I wanted to see price do this here, and I said I want to close this up inside this candlestick here. Now that we've done this here, we've moved from that 450 level down to 420s, and we've gone into 410s. I mean, that's interesting. This candlestick slow is 408. So we've moved in the direction of momentum. We've moved at least 40 points from 450 to 410 right now where we're trading at, but I want to see it going to that 404 level and trade into 400. That's what I'm expecting right now. But the point is, we annotated that sell side. So price is going to trade in the direction of this sell side. So what are you going to be doing? We're going to be selling and expecting price to run in the direction of that liquidity pool. And that's what it has done. So from 450 level, I've mentioned here a couple of times that I want to see it drop from 450 to 430. 430 is the price point where I would have taken this off. So we dropped here. Going to for this low, the low of this candlestick here is 429. That would be so close because I will not have been filled out. We ran higher back into 460s. right? This candlestick high is 463. We're going to be looking at the highs down here. 463. We open up another candlestick, we run lower across through that 430 now. And we open up this macro here, we run higher back into 460 again. Inside where? The bearish order block here. And what does it do? Run higher. I've talked about that sell side, and what does it done? Boom, right? Beautiful, right? And what's this candlestick's low here? 400.20. Beautiful, right? So I guess this stuff still works, right? So that's sell side. And what is it trading through? That inefficiency that I've just talked about. That inefficiency that I've just talked about. So I want to take that sell side. Just look at it here. Not that one. This one. It is. That is now silver. Okay. And look at this here. We've gone through that 400. Where we're trading now? 388. So if it's gonna do that, and what's the next drawn liquidity? Right there. It's beautiful, right? Just beautiful. Look at this 15-minute chart. Look at this drop. And where is that drop from? London open. And it starts here at 9. We open up London. They push it lower into the sell side through that very small inefficiency that I highlighted. And what's the next draw? That sell side. So you tell me if you cannot get 20 to 30 points even out of this price move here with this very high resistance liquidity run inside here from where we open up, we are bearish. The momentum is bearish. I talked about that very clearly. I did not say we're going higher. I did not say we're going anything near this here. I anticipated that low plus that low. And another thing important I talked about that low is yesterday's low. Yesterday's low is right there. So that's still a liquidity pool. Even though we've gone through it here in Asia, this retracement back is just to welcome in this open, and then we're going to run that low again, and that's where we've ran to. This is just beautiful. So that's really it. I'm not really gonna stay here and wait for it to go into this here. This has achieved my objective for this morning, or this time where I expect price to do something. So that's really it until tomorrow. Tomorrow is Friday, so until tomorrow, adios.